Hello, everyone, and welcome back to Sudden Wealth. If you do, I hope you're having a wonderful day and end of the week. If you do enjoy the content, please consider dropping that like and subscribe. So, quick update. I'm already seeing uh, about the AMC's dramatic collapse. Now I'm already seeing the YouTubers saying, "Oh my God!" But now this is actually very good because now the shorts need to cover, and basically the Maron will repay the debt, so the company will become much better. Once again we are back to this, but I think you already know the drill by now. But I wanted to focus on something else, which is where we are right now in the market. So stocks are actually quite resilient despite some issues on the bond market, which is still quite considerably low. And I do believe the market is pricing higher rates. So manufacturing activity is higher, so it came hotter than expected. And also the oil prices are ticking higher following Saudi Arabia's extension of production cuts. Now, I actually have a different of opinion because I've already seen people predicting oil $120 and all of these things. I actually think that we are approaching a short-term peak for the oil market. If my cycles are correct, we should see the oil peaking sometime late September, beginning of October. But once again, we'll see. Everybody's talking about $120 oil and all of these things. And I'm saying that actually we are approaching the peak for the next few months on oil. We'll see who's right. But what does that mean? Basically, oil and energy globally is the basis of all the economies. So if energy costs go up, transport costs go up, shipping costs go up, agriculture costs go up, chemicals, fertilizers, everything goes up. So what does that mean? Higher activity, higher base costs, expectations for higher inflation, which means the Fed is not done tightening. That's the prevalent opinion that is starting to arise. Now, what I mentioned before, and I keep this by the way, is that actually what the Fed wants, and will probably do, is to keep either rates high or slightly increasing them until they see some serious signs of something breaking. So once again, the rumors of the banks are back. Look, the banks are always at jeopardy as long as sufficient people withdraw, or sufficient companies withdraw their cash. That's it. Now, what the Fed can do, and I hope they've learned their lessons, is to open these discount windows, which are like emergency liquidity lines. So for people who don't know, they actually can print just a bit of money to cover up for the missing deposits if there's a big withdrawal for a short period of time, and the whole situation gets solved. Once again, the problem does not come from there. Number one, because everyone is expecting it, but number two, because actually the tools to solve it are not so hard. But I do believe they may let a few other regional banks fail, because I think what the Fed wants is a few big banks, and they don't want this kind of stuff like 1,000 small banks and all of these things. But that's besides the point here. So what matters the most is the bond market. If the bond market is struggling, it will be difficult for stocks to move much higher. I told you a few weeks ago when we went vertical, sell-off would be good. We had it, and then I said maybe going to be around sideways movement. Here we are in sideways movement. All of this information totally for free, while all these clowns in the financial world, and particularly, oh my God, on YouTube Finance, were already predicting the end of the world once again as soon as we had an 8% drop. Guess what? When their videos hit the most dark, that was actually the bottom, as you would expect. Because everyone was predicting the end of the world. So guess what you get? The opposite of that. It's very easy, very predictable. That's the way markets work. But you see, these guys just care about passive income generated by you joining their Patreons and their private groups and watching them non-stop. That's all they care about. So they tailor-make their content like that. The more sensationalist and the more depressing, the best, because it sells the most. Very simple. Now, regarding the inflation expectations, I've mentioned this before as well. There is no chart of inflation, not even when we went from 13% in the 80s all the way to 0% in 2009. That doesn't mean that every single month is down. You can go down, have an uptick, and go down and have an uptick. Basically, I do think inflation gets completely thrown out the window if next year Trump is elected, because he already said what he's going to do to solve the inflation crisis, which is to drill oil. Yes, if you drill for more oil, you drill for more gas, you lower energy costs, you lower all the costs in the economy, so the Fed can now reduce rates. So I do have a feeling that a lot of people want him to be elected because they actually agree with all the oil drilling again, but they don't want to admit it in public. So they prefer to have a guy who already has a bad image in the public to take the blame, while doing exactly what in secret those people want. But this is the world we live in, full of rats, dishonest, and to some degree a bit coward people. Now, my prediction stands. I do believe we're going to see new all-time highs, at least for the Nasdaq 100, Dow Jones, and S&P. Russell 2000, I throw it 50-50. And for the crypto market, we'll probably we should start seeing some fireworks later this year, and we should start seeing some nice events coming forward in 2024. I am still trying to really understand what's going to be next cycle's narrative, but we are still early, so I think we still have the time for it. But basically, there's nothing major outside of what I already predicted happening, but it's important to kind of analyze all the information. There's a lot of noise out there. You need to filter it. And then when people say, oh, this is going to be Great Depression 2.0, look, guys, we had something called the gold standard. In that period, yes, that was possible, because if you printed money, your currency would be devalued so strongly versus gold that the bad things that printing would cause, the effects would be immediate. Nowadays, we don't. We have paper currency, we have Fugazi money. So, unfortunately, a lot more long-term damage is allowed to go by because it's spread throughout the years. So it becomes the principle of the frog in boiling water, right? If you throw him straight to the boiling water, it jumps off. But if you heat up the pan slowly, he will let himself stay there until the water is boiling. Same principle. So thank you very much for your support, guys, and I'll catch you in the next one.